Good afternoon, traders. It's Mark here from the Day Trading Room. Time is approaching 2 p.m. London time on a Sunday afternoon, and I'm just at home reviewing my trades from last week, in particular Wednesday, Thursday, and Friday, but also reviewing just the whole week in general. What's been working, what hasn't been working, what needs work with my own personal trading, what needs improvement, what I've been doing well, and then just running through the trading plan. How's my trading size? We're ready to increase that. Risk management. Is the stop position still working well? Tape reading working well? Just running through a checklist of everything to make sure that the machine is well oiled and that we're prepared in the best way possible for the next week. Trading, if you're a professional trader, is just like any other business. Think of all the great businessmen in the world. Richard Branson, as an example, he's constantly evaluating sections of his business that are doing well and those that aren't doing well, and makes little tweaks and adjustments as required. And trading's no different. Trading's no different to any other business. It requires adjustment, tweaks. Sometimes everything's going perfectly, or never perfectly, or going well, and you only have to make minor adjustments. But that's the nature of the game. It's just putting the effort in and constantly reviewing what you're doing as a trader. And one thing I want to do before I review the trades for Wednesday, Thursday, Friday, just talk about the room hours. A few people have come into the room and said, there's nobody in there. What time's it open? It's actually open 24 hours a day. But I'm in there, and most traders are in there for the first few hours from the US Open. So if you're interested in coming and having a chat and talking about some trades or what have you, pretty informal stuff, then the first 2 hours or so, when it's most active, there are some other people in there throughout the day. But if you come in on a quiet lunchtime, you may find that there's nobody there. So first couple of hours of the day are the time to come into the room if that's something that interests you. Last week really was interesting in terms of how the day types change. Now, where are we? 13th. If you look at the 14th, for example, we had this monster trend day, and we pushed down, and then we sat into this monster, solid trend day. Now, another thing I wanted to mention really is in terms of playing to your strengths and weaknesses, or playing to your strengths, and not being too concerned about your weaknesses. I know it's easier said than done. In some cases, you have to work on weaknesses. But as an example here, this is the 14th. Yes, it was the 14th, and I made a lot of great trades at the beginning. I'll talk through some of those. I won't talk through all of those. I'll talk through some of those in a minute. But great trades, my type of market, very active, very oscillatory. We were bouncing off key levels. The tick was being clear. We had good pullbacks, good drive lower. Everything that I like about the market. This was my type of market, in other words. My type of market. But then, pretty much within an hour, we flicked to this solid uptrend, very low volume, which is not my type of market. I've made no secret of the fact that grind up trend days are my most disliked type of day. I don't like them. I'm not very good at trading them because I only have one trading setup for me, and that's on a longer term cycle lower and buying. Or I'm waiting for some sort of panic lower, and that's it. So when I see this, I do not trade. I know it's something that I'm not as good at, so why try and be a master of every single market type? I know that I am good at this earlier sort of trade. This is my sort of thing. Lots of volatility, lots of volume coming through, getting a good clear tape read, reading that short-term order flow, taking the risk off early, looking for those runners. That's what I'm good at, so that's when I put the throttle down. Now, when we started this sort of trend day, I step right back. I do absolutely nothing. I do not get involved in it. I still keep my eye on things, of course. Every every minute you spend watching the market is a minute of extra knowledge you're gonna gain. So I won't be sitting in front of the screen, but of course I'll have the computers on, and I'll be glancing every now and then and just waiting for a potential setup. And for me, there's only two ways that I will trade this type of market. And does it bother me that I don't capture this profit from here to here? We had a 350 point run, 350 points. Does it bother me? Not in the slightest. Lots of guys are saying, "Oh, it's 350 points. I can't believe I didn't make anything out of that." What does it matter? What does it matter? I've been in days where the market's moved 50 points range in total, and I've had some of my greatest days. Because that's just the market's just been moving great. It's just probed through levels. It ticks a bit. It doesn't matter. Forget about all this. Leave this to the investors, the swing traders, the trend traders. That they capture it. Well done to them, and I'm pleased for them. But it's not my thing. Not getting involved in it. But anyway, enough of that. Let's talk about how I do trade that. Any setups I have are looking. I'll look in the last hour, 8 o'clock, and I'll see if we get a panic sell-off, or any point if we start to get oversold on the 5 minutes. So if we've got a stochastic or some sort of oscillator indicator, the first oversold after a run. So if it had come down to say here, if the price is pushing down to here, perhaps maybe get a little probe lower, then I'll take it on small size, because I know that when the volume's low like that, it's hard to get a tape read on it, and then I'll look for a drift back up. But anyway, apart from that, I'm just looking for this panic move here, and actually we got it. We actually did get it this time. Don't normally get them. Normally pretty rare, but we did get a bit of a spook for the bulls. They ran for the door, and had to wait for confirmation for it. Obviously, didn't want to jump straight in because it's still monster trend. So let's get the cluster of low ticks, get the pull back in the ticks here. Nice little spike up there, little wick almost. I like to do that when we've got this sort of action. You get that wick, come back into the range. There's my stop, and then the market just rolls over, and I'm looking for that sort of move. So pretty aggressive scalp, not much. I didn't take much out of that, but that was the trade I was looking for. Nice to put a little bit extra in the account as we go into the close. What else did I want to talk about? I don't want to cover every single trade here. I did want to mention actually that doing a lot of tape reading and active trading at the open. That was an 8 point stop for me. Just misread that, just spiked, and that's really what I wanted to say about the tape reading, is that it's not, nothing's perfect out there, guys. I'm getting emails from people saying, "Oh, if I could learn to tape read, I could do this, do that." And there is no perfect holy grail. For me, it's my biggest edge. It is my biggest edge, and when put in conjunction with the right type of market, and it's a great example actually. If you start trying to read the tape here, you're just going to go loopy. There is nothing to read. The volume is slow. It's just chugging up. Okay, and at any point it could reverse. So yeah, but this action at the open drive, good tape reading. Anyway, so that was a little stop out for me. First time for a while taken more than a scratch. A loss, but eight ticks. I'm not going to concern myself too much. Reshorted it as it got the confirmation. Was just trying to get a little bit too early on that, and then we rolled over and that was a nice little scalp trade there. But these are the trades I wanted to talk about. These are the open, I guess. Really, this was the best day for me in terms of just getting everything right. Even though when I look back on the day and look at the chart, it looks horrible from my trading strategy point of view. But just wanted to mention how when you're looking at price action and you're reading short-term order flow, how easy it is to flip your bias from one to the other. Now, I just want to talk about before the market opens, I will have levels marked on my chart. So obviously the prior day's close with the YM and the cash. Prior day's high, prior day's low, wherever that's down there. Key psychological levels on the Dow index cash, so 11,000, 11,100, 200, 300, 400, etc. Key support levels, resistance levels on the charts, whether that's from yesterday or your 15-minute or whatever. Overnight highs, lows, key levels overnight. And all those are compiling levels. Now, how do I use those levels? Well, basically, either initiate a trade at them, or I use those as targets if price action gets me into a trade. So what do I mean by that? I mean that if I'm watching the tape and I see something that I like, example, if you've seen any of my videos, one of my very, very favourite plays is the drive lower, the pull back, the little pull back in the tape. Sometimes you get a ticks to zero, but the first one maybe not, second one normally, depending on what the situation is, and taking a trade in the direction. Actually, here was one here. This was the drive lower on some European news. A little bit of volume coming in, nice low ticks. We pushed up in the ticks, a little bit of a pullback, more of a tape pullback than a tick pullback, but That's what I'm looking for on that, and then a drive lower. So anyway, that's what I call price action getting me into a trade. In terms of I'm just waiting for that, and then I'll initiate a trade on that and use targets that I've predefined from the night before, the day before the open, to exit the trade. So in this example here, actually, it's quite a nice little example we stumbled across. Hopefully we can see. Let's bring in the Dow Cash. It's a nice example. That was the push down we just saw, and that's 11k cash, 11k on the Dow Cash. So a level to exit the trade. No need to, no magic involved in that. Just exiting as we probe to 11k on some nice low ticks. But this here is basically telling as a marker, not a marker. It's notes. It's notes telling me I flipped from taking the last scale on my long uh, exit to being short within 40 seconds or so. So that's really just to point out that price action is ruling all. Once I see price action, once I see market response to certain things, in particular, and this example, the market response to the push to the high. What happened? Wick formed, fine. Now the next 30 seconds are crucial to determine what's going to happen next. A little wick's okay if we drive up higher. If we then start to drive lower, what's happening? The expected response isn't there. We're starting to get something different to what people are expecting. That's appearing on the tape. Then the ticks are confirming. Then we can start taking our short, scaling out into that push lower. But before the open, I'm looking at various things. I know that there's the range fill there. So one of the things I mentioned in the room is perhaps we get a range fill, and then I like to see if we hit the overnight high. We actually missed it by a few ticks, which was another reason that you're looking constantly at levels and price in relation to levels, and then you're looking at the tape as we approach the levels. So as we approach that overnight high, I don't know what it is off the top of my head. I think we're about 6 or 7 ticks short. But as we approached it and didn't push on, pull back, fine, we can accept a little pullback. But then when subsequently we got to drive lower, then we're starting to the hands being tipped. People are starting to show their true hand on the market, and we can then look for some sort of setup, which for me, a little pullback, never chasing stuff like that, always waiting for little pullbacks in ticks, in price, in something, some sort of unwinding, to make sure I'm not chasing that, to make sure I'm not that panic buyer seller who I will normally be selling to, buying from on the exit. So just waiting for that and then watching the response to that. So good push lower, watch the response on the pullback. We'd pushed under the last low, we'd pull back to overnight high. Let's see. Ticks not going very high. Bang, we can take the short and then look to scale it out as we start to probe lower. So lots of different trade types, really. A lot of the stuff's continuation, a lot of stuff's tape reading off the open, and really, it's just being aware of the current market environment, being aware of the market type, being aware of your levels, and knowing what is working for you and doing more of it. So that's all I've got for you today, guys. I don't want to go into too much depth of the trades. I know it can be a little bit laborious, and I know this blog is for me. It's my video blog, but at the end of the day, I recognise that the people are watching these videos as well and getting something out of them, or not, as the case may be. So yeah, mindful. I don't want to ramble on and on and on about stuff that's only meaningful to me. So anyway, I hope you get something out of these videos. And if you want to join us in the room, first couple of hours is where most of the action is. After that, people tend to drift off, although it is open. And if you come in and you type a message, people will see it when they log in next time. So good trading, guys. Please manage your risk. That's what it's all about. Just make sure you're constantly evaluating the trade. Do you still want to be in that trade? Is it do all the hard work? Plan your trade, or plan your risk management and trading plan, should I say, create your trading plan before you start trading. So in the heat of the moment, you haven't got to make any decisions about risk, about size. All you've got to make the decision about is whether to take the trade or not, and at what level. Once everything else is done for you, life becomes easier. So you know what trading size you're going to do, you know your maximum risk allowed, you know that perhaps where you can tighten your stop up to. And once you've done that, stick to it, and let those negative emotions, they're going to come onto you. They are going to come onto you if you make mistakes, if you miss things, if you get things wrong. It's going to happen, and we're humans. We are going to feel negative emotions. But as long as you're not trading from a negative emotional state, then you can keep control of them and let them pass over you. Walk away if you need to. Come back with a fresh mind and a fresh approach. So anyway, rambling on a bit now. So call it a day. Enjoy the rest of your weekend. Back with another video, probably midweek next week. Take care.